so envy you because it's almost a heat wave here in Mumbai and many other parts of the country. And you must be having such good weather in London because, you know, my bigger concern is what happens to inflation because we're headed in for a very hot summer. And I hope monsoon is on time because that's going to have a huge bearing on inflation as well. But anyway, you know, that aside, what sectors then do you think, Sunil, are going to sort of propel this gradual recovery in growth? And would it continue to be premiumization and urban consumption?
Yeah, I mean, we still like the premiumization story. We still like pockets of urban consumption. We like to play, I think in general, if you look at our sector allocations, we have a tilt of consumption over investments. And so we like to play the consumption story through the autos, which is partly, I think, the premiumization story, which we just mentioned, but part of it is also the recovery in the rural through tractors and two-wheelers. And so I think auto continues to be our one of the favorite picks within consumption. We have also upgraded staples recently. I think the key view there being that the volume growth has already been recovering in the recent quarters, as we know, but we also think that the companies may be able to take up some price hikes, which means the margin pressures which we were seeing in previous quarters may start to ease. And so a combination of slightly better volume growth or continuing improvement in the volume growth with sort of easing margin pressures means you have improving profitability for staples. So I think those will be the two cohorts from the consumption side of things. In addition to that, we also think that it still makes sense to be sticking to the quality sector, somewhat more defensively positioned within our allocations, having a sort of quality tilt. So we still have a sort of overweights on telcos, overweights on insurance. We also have IT as overweight. So all three of them are relatively kind of defensive sectors. And where we have more cautious views, as you are just mentioning, is more sort of capex intensive sectors. Cement comes in there as well. I mean, durables are there, but we have also sort of taken sort of industrials down from being overweight to neutral a few months back. So in general, I think it's consumption over investments and sort of somewhat more defensive in our allocations. And we have also been a bit more cautious on sectors that could get impacted from the potential tariff that could come through in April once the US decides on reciprocal tariffs and other tariff related issues. And I think pharma could be the one that could be impacted there. Metals are also something that could get impacted. So we are also underweight those spaces.
If you like this video, then like, share and subscribe to ET Now.